How's it going, guys? It's Ralph here from Beyond the Huddle. Welcome to this week's Bitcoin Weekly Forecast. And like always, we're going to take a look at the Commitment of Traders report. We'll take a look at the hash rate, and then if we have some time, we'll touch up on some on-chain data. So stay tuned and let's check it out. Okay, guys, so getting started here with the COT, that's the Commitment of Traders report as of last Friday. The data that came in right here said that the asset managers, which is the group that we're interested in, decreased their long positions by 66 contracts. Now, that'll come into play in a conversation we'll have very shortly, but more importantly, something that we wanted to, we've been wanting to see, and this is step number one for us to actually determine and confirm a reversal in the market. Step number one was we either wanted to see a consolidation in which they would reduce shorts like this, or we would want to see a move lower in which they would reduce shorts, or the third scenario would be and the one that we didn't really want to see is that the price would go up aggressively while they reduce shorts. Now, we didn't really want to see it because then that means that, we missed out on some price action, and now we would have to wait for a retracement, which is sort of what we're looking for right now. But, either way, it's fine. I mean, we sold near the high, and now we don't have to get the absolute bottom. Prices are still down, I think, 40 plus from the high %. So it's really not that big of a deal. And it is what it is. The way I would like to trade is waiting for the confirmation of these people. And actually, right now, like I said before, we're still not really out of the woods yet. This was step number one, which is then the up move, and then you'd have to analyze what the price action, the backdrop of that price action was. And I would call this an actual bullish move. It should be trusted because shorts were decreased. And as you can see here, I also highlighted this during the weekend when I circled it during the weekend when I made this post, and the reason being is that now the asset managers hold a considerable amount of longs in percentage, right? So when you compare the two, the longs with the shorts, they're way heavily long. As you remember, back in January, February, and March, something we've talked about before, they were way more heavily short. So you can see back here in February, shorts were above 60%. That's this dotted line, and then it went up again to about 74, as I mentioned, 73 back in April when the high was made. Now, interestingly enough, when we look back at these percentages, we're at 74-75% long, and as you can see, that's what happened last time when the September low was made. We had a ridiculous amount of longs in the asset managers, and that trend sustained all the way up until January when the environment started to change. Now remember, the signals could be early, and that's what we use price to confirm the idea of the positions. So remember, right? Step number one was seeing a large decline in the shorts. So let's go take a look at that. As we can see here, we wanted to see the shorts go below this August positioning, and then we wanted to see an aggressive move lower. So the aggressive move lower did happen, and my opinion on that was they wouldn't let the market go higher until a large or substantial amount of their short positions were taken off the table, right? If they are speculators in this market, why would they want to be losing during an up move? Why would they want their shorts to be losing if they knew that they are the market, right? So that was step number one, and we have gotten this. Now, to touch on these longs, that's kind of what's concerning me a little bit right now. And to go into that, we're still above the average, so there's no need to panic right this moment. But the problem with this is that back in February of 2020, we sort of had a scenario just like this, where, and I can pull up a picture here, so we sort of had a scenario like this where, there you go. We sort of had a scenario like this where you had a huge drop in shorts. You can see it happen back in, and these are the two different types of scenarios that I'm looking for right now. And that's why this video, I think it's pretty important, because my two different types of scenario is we either make a low, like what happened back in August and September of 2020, or so you see it's starting to look the same right now. So what we would want is the shorts to keep lessening, go near zero, and then just stay there. That would be the best case scenario, assuming we're going to see new all-time highs and a 200% rally, 300% rally, whatever it may be, and we're going to continue the bull run. That's what we're going to be looking forward to. What could also happen, though, and this is why I'm happy that this happened, but we need to be in reality and not up in the clouds and being moon boys and thinking everything's gonna pump. And that's because last time we hit exactly 165 contracts, which happened back in February 10th of 2020. If you guys don't know what that is, that was the exact high of the February rally that led to the March drop. I mean, that was a disgusting drop in price. Let's go take a look at that real quick. Look at this right here. The exact price, February 10th. There it is. So that was February 10th, and that led to a, 65% drop. So that exact same time, it looked exactly the same. Look, straight down, a large decrease in shorts, and then look what they did. They started to slowly increase those shorts. So obviously we'll see in the shorts if they start to increase them again, right? There's a clear difference between them having a sharp decline and then increasing the position versus having a sharp decline and then, yeah, it did increase a little bit here, but then they stayed flat. And guys, the real giveaway here will be if the longs can actually stay low or if they can increase. And that's actually the difference between the September low back in August 2020 and the February high back in 2020. So if you can see here, during the February high in the February 10th high back in 2020, this is February 10th right there, and the long started to go straight down and decline. And then if you compare that to what happened back in September or the August, the September low, you can see that longs were up, down, and then finally in September, they bottomed out, and then they started to increase. Again, drastically different two situations. So what's currently happening right now? Well, currently, as of this past week, they had a huge decrease in longs. So that's not looking very good, because if we did expect the market to go up exponentially or trend, we would have wanted to see the longs keep increasing. And that's what I'm saying. We need to be very careful right now. It is an exciting time because we finally see them decrease shorts. Remember, if they're going to close out some shorts, that means that they no longer have an interest to be so short this market. There's still 165 short positions, and they could potentially add more shorts while decreasing longs and then dropping the market. So that's my current analysis right now, guys, for the COT, the commitment of traders. We have to be very careful. These are our two scenarios. And the last thing that I wanted to touch on right here is when you go back to these longs, is right now we're still fine. Why are we fine? Is because we're still above the average. If we go look back at the September move, you can see right here, that's when it was messing around. It would try to go below the average in September, but then quickly go back above. Try to go below, quickly try to go back above. If you go back to February 10th, it did the same thing early February, but then when the high happened on February 10th, within 2 weeks, it was already below it, and then it stayed below it during the entire move. So here we got the high. 1 week out, we're approaching the average. Next week, we don't want to see it go below. Right? What we would want to see is have the longs go straight back up and then keep confirming what the price action has already confirmed. So there you have it, guys. That's what I'm thinking for these commitment to traders positions. Now let's move on to some on-chain data to kind of gauge the sentiment through that aspect. Okay, guys, so moving on to this section, well, before we do so, again, I want to reiterate that we have two scenarios that we're looking for right now. Scenario number one would be that the orders will actually keep increasing, so the buys, the longs of the asset managers, while the shorts keep decreasing, everything will be fine and great, and this will be the low in the market. And then the other scenario would be that this actually was just a fake move higher, a 40% fake move higher, and then we're going to have either a large decline for a discount buy, or we'll have one more sweep of the current low that happened, and which would end up being kind of like a February 10th, 2020 drop, right, where it dropped between February and March. That was the COVID black swan drop that everyone's that's what people called it. So again, those are two scenarios, and now we're going to use the on-chain data to sort of support one side or the other, right? And it's quite clear after taking a look at this data, you guys are going to see the black swan sort of COVID scenario is the one that it's being favored right now, because the on-chain data is just completely dead. And what better way for me to show this to you guys than someone who actually spends all his time 24/7 creating new on-chain tools and really analyzing this as a job. So this guy's name is Checkmate. You can find him on Twitter. He's an on-chain analyst for Glassnode, and I remember I met him through he's a big Decred supporter. And that's how I met him, through his tools and analysis on Decred. So again, a brilliant guy, someone you guys should definitely take a look at for his on-chain work. But he himself, a large Bitcoin bull, is kind of worried right now because the transactions and the type of stuff going on the blockchain is just absolutely dead. He's afraid that there's no demand here. So you can see he put I put up a picture with only 168 transactions on this block right here. And I found that to be really interesting. When you take a deeper look, he ends up saying, folks, this is the result. This is not the result of Lightning Network, right? So people think, oh, the blocks are empty. This is because the transactions are going by so fast. He thinks it is a lack of demand for the block space. Now, that's really important, guys. So he says here in a different thread, I'm just bringing these up so you guys can see them. Let's see. Someone asked a question. I'm trying to find that one right now. So we can just click on it, and then someone's question right here was, okay, great. So I found it. So basically what happened was someone had troubles understanding what he meant by this. So obviously he says impressive, but he's being sarcastic. And he's talking about some other person's picture that it said one transaction in that block, So he said there's one or two things could be happening here. He said, number one, everyone's in disbelief. Nobody believes the bottom is in, and we are going to moon, and nobody's on board. Well, right off the bat, we don't even have to read the second one, because we know everyone and their mother is super bullish right now. Everyone is saying they bought the low. Everyone is saying that this is the mid cycle reversal. And while I do agree, I don't agree with the mid-cycle reversal part, but I do agree this is, a mid-cycle retracement. So everyone thinks we have already seen it happen. This 40% rally was the low, and we're going to move on to all-time highs and reach, 100K, 160K, 200K, and so on. That's what I'm hearing from everyone, even from the people that bought the high that ended up buying more at these lows, okay? So pretty good supporting evidence that number one is not right. Now, number two says everyone is bullish despite there being little on-chain demand, which means bulls may be overestimating the demand in the short term. I do agree with him. He says long-term, no worries. Again, of course, I'm a long-term bull, but in the short term, I agree with number two. I think everyone is just too bullish. On-chain, as I'm about to show, has absolutely nothing basically going on. I am not seeing the bullishness. So we can attribute the bullishness in price based on these asset managers and whoever else in the spot market, bidding up the price, closing a bunch of their shorts, even though the underlying health of the blockchain has not recovered. Again, as I'm about to show shortly. So you can see here, if we go look through some more of his tweets, you can see this one right here, right? Someone asked him, so when's the last time that this happened? And lo and behold, December of 2018. Now, for those of you that don't remember, us in November of 2018, we called that 55% drop. That was around here. If you can follow my mouse, actually, let me bring it up to you on the price chart. That was right around this $6,000 wedge that everyone was saying, oh, the price can't fall below 6,000. The miners, that's their psychological level of profitability. If it ever goes below that, then we'll no longer, again, the market will fall, it'll die, because they won't be able to to keep paying their bills, so on and whatever. Well, guess what? It did indeed drop. We predicted it. We sold somewhere around here in early November. I think it was November 3rd that we sold, and then boom, straight up crash 55%, and that was the actual low. Now, as then you'll know, we didn't actually buy the low in Bitcoin there. We actually ended up taking advantage of RVN for a 500% rally and some other coins. But nonetheless, that is what I think might actually be happening right now. I think we might actually get some weird, event where we see a price move lower and everyone here has just got caught up in a bull trap. And like I said again, the on-chain will suggest that, as I'll show in the future. And like you saw earlier, the order flow from the asset managers can potentially give us the insight, depending how the longs behave and how the shorts keep behaving, that this could actually happen. Okay, so again, check number one, we have a guy who's very brilliant at this on-chain stuff, who is, again, one of the biggest Bitcoin bulls I've ever seen, telling you to be careful because the demand for the blockchain is just not there. And then he says it looks kind of like December of 2018, but we haven't had the drop yet. And when we take a look at the actual addresses, so this is right here is the new number of addresses on Bitcoin, and it looks an awful lot like in 2018. Now, I'm not saying it looks like 2018 in the sense that we're in a bear market. I keep saying that we're in the middle of a bull market. This is just a retracement, but there's a lot of similarities. Look at this right here. The high was around 500,000. Then the addresses fell to about 270, 280,000. Right here, about 500,000, 550,000. And now the addresses, they're still falling, and they're around 380,000. Now, this is not the actual number because this right here is a 90-day moving average. I like to use the 30-day moving average and the 90-day moving average to really see when these data switches trends, right? Because if we look at it on a 0-day basis, it just looks like a bunch of noise, right? If you look at it on a 7-day basis, it still looks like a lot of noise. So again, I know some people like Misha, he'd rather look at the 7-day rather than a 30-day or a 90-day. But for these type of stuff, since it's my sentiment, right? This does not dictate whether I get in or out of the market. It just dictates how aggressive I want to be. Or if after I'm in the market, if I should be cautious, okay? But what dictates whether I stay in and out of the market is always price levels and is always orders, okay? Those two things, price and orders from COT. So if we look at the 7-day, just real quickly, because again, I know some people might bring this up. We did have a move higher, or actually, let's take off the 7-day. Look at this right here. We did have a move higher from 300,000, 280,000 to 400,000 orders. And then the orders went straight down. I'm sorry, not the orders. The unique addresses went straight down again. Okay, and now that has led to a little bit of a price decline. So there you have the unique addresses. Again, nothing's going higher. The 30-day did switch a little bit, but again, nothing for me to really be too crazy about. Same thing with the hash rate. On a 90-day basis, we're straight down, guys. This is one of the largest drops ever. On a 30-day basis, we did move up a little bit, but nothing too crazy. Nothing for me to say, wow, this trend might actually be changing. On a 30-day basis for the 100 addresses or more, same thing. It's actually bearish. So think about it. Addresses with 100 Bitcoins or more are actually selling into this market. Addresses with 1K or more are actually neutral. And last but not least, addresses with 10K or more are they've been sliding bearish since June, and they're about neutral since July. Okay, so I'm just not seeing it, guys. The block space is showing no demand for transactions. The actual unique addresses is showing aggressive decline, and as you can see here, all these large wallets are also showing that. So I'm starting to side with the prediction, with the forward thinking that, hey, yeah, this was a nice 40% rally, but January rallied too, right? And then you got destroyed if you didn't see February coming. So let's take a pause here. Let's move on to the price action and see how we can piece together this order COT analysis and this sentiment here from the on-chain into a price action prediction. Okay, guys, so now moving on to everyone's favorite part, the price action analysis, where we get to put together the COT idea the analysis and breakdown, and the on-chain sentiment data, and we get to put it into the charts with a couple levels of what would keep us bullish, bearish, and so on. So if you guys can remember, last time we spoke about anything here, we had, and I just want you guys to pay attention to two different lines, and we had this big purple zone, and we had this small red zone. Now the small red zone was, it would make a short-term bullish, and then we wanted to wait and see how the monthly candle would close. If it could close above this purple bullish line, that would make us what? Long-term bullish. So you can already see there's some disconnect there in price and what levels just got broken to make us bullish versus what the overall health of the blockchain is telling us, right? There's nothing basically going on in the blockchain. And the sort of murky gray area of what's happening in the orders, where we did see a huge drop in the orders as price went up 40% in the short orders, but yet the longs also went down, right? So maybe that can explain this down move happening right now. So essentially what we can do is we can get rid of this purple zone because it's no longer useful for us. We can get rid of this red zone because it's no longer useful for us. And now we can just focus on these two zones, which is a red zone and a purple zone. Every time you see a red zone, it'll always be a short-term level. And then anytime you see a purple zone, it'll always be a long-term level. So the point here is I drew some new levels because it's a brand new month. I wanted to reassess what support and resistance levels we could potentially have, and that means that our weekly level, obviously the short-term level, it'll change every single week. So looking at our short-term level, we actually are below it. When I first started recording this video, or at least gathering information to record the video, so this morning at 8 in the morning, we were actually hovering around it, and I was going to end up saying in the video that I didn't know how I was going to react, but now that I'm almost done at 4 in the afternoon with the video, you can see that this daily candle is about to close below it. So what does that mean? Well, one, we're below the monthly open, so you can see even though we're above the quarterly open, we're below August's open, and now we're short-term bearish because this daily candle could potentially in the next almost 3 hours close below that level. Okay, so that short-term bearishness would then bring us to what? Our quarterly open slash long-term support level slash the discount using the fibs. Okay, so I taught you guys all these things in a free course. And of course, that's using SMPDT. That's the levels that I would potentially be looking at to get into this market. Okay, so again, we have the quarterly open, and then the 61 to the long-term monthly support level, and then we have all the way down to the 78. Do I think we're going to get to the 78? Not likely, due to all the support that I can see here. But who knows? It could happen. What I want to see now is, since we're short-term bearish, that supports the on-chain data, right? The lack of demand in the block space and the lack of active addresses, the lack of increasing wallets, and so on. I would have to be very, very careful as we're hitting this right here. I would want to not see it slice right through and give us a big expansion candle. I would want to see hit the level, maybe consolidate a bit, and then start breaking to the upside to have some more confirmation. Okay, you don't want to catch a falling knife when the on-chain sentiment is giving you a bearishness, and then the orders of the asset managers decrease longs. Had they increased longs while they decreased those shorts, then yeah, I probably would have added in half of my position risk there with some sort of stop loss and so on. And I think in the future, I'll have to go ahead and tell you guys exactly how I would get into a trade with my risk management and all that, because we have really never talked about it. But without getting too much into detail, I'll tell you guys, I never risk more than 2% per trade. And at the absolute most, I will never go above 5% risk. Can I do 2% in, let's say, Bitcoin, 2% in Ethereum? Yeah, sure, that can happen. But you never, or, you know, I never want to put in 25% of my portfolio, right, and be risking that 25%. I never want to be risking 50%. I know some people just straight up put in 100% of their portfolio, and that explains why they're always stressing out about their trades going down 5%, 10%, and so on. You have to think of this in a long term. You're not here to just, you know, get rich quick overnight. I mean, maybe you are, maybe you're trying to, but that will cause you to lose a lot of money. So anyways, without ranting too much, that's what I'm thinking right now. I am short-term bearish because we're below this red zone. As long as we stay below this, that's what I'll be. If we go back above, then we'll have to challenge this monthly open. If we can if we can go back above the monthly open, I'll be forced to buy, because then we can have a potential retracement back up to around 50,000, 52, 53,000, somewhere in there. But we'll talk about those levels as they get there. For now, again, I am long-term bullish, so that I need to, like, this weekly candle cannot close below that purple zone. If it does, I have to be back bearish again, okay? So this is how I'm going to play this. Anytime that we dip into this, I'll be looking to buy potentially. And again, as long as the weekly candle can stay above that level, everything's fine in the world, and we're going to continue to be buyers. And what we would want to then see is the on-chain data start to produce some more blocks and more transactions and so on. And honestly, one good reason why there's a lack of commitment by large players in this market right now is the regulatory issues, right? BlockFi's having troubles. I think now they have all 50 states with a cease and desist. Tether's having troubles with the Department of Justice. Binance is having trouble worldwide. There's, I think they just restricted their leverage. They can't even operate in Germany, or not, I'm sorry, not Germany, but in Italy and some other European countries. Malaysia's starting to go after them. So there's a lot of uncertainty going on in the market right now that it definitely supports, and it definitely makes sense why we have a 40% move, and then instantly I get my short-term bearish signal. So with that being said, guys, I'll see you next week. Tune in tomorrow for any thoughts that I might have in the altcoins. And again, maybe we'll see, 35 to 36,000, and maybe as low as 33,000, where we'll have to make a decision. So stay tuned. Maybe by next week, I might have a position open. So who knows? So with that being said, I hope you liked this breakdown. It was quite long, but it had to be done. You guys have to understand the risks involved if you're in the market right now, because we don't want to be blindsided by a February 10th, 2020 move where it just falls 64% in a matter of a few weeks. So have a great day, guys, and I'll see you soon.